Well, hello and welcome to Blackstone Minerals Nickel Day. Delighted to see you all here today. My name's Leo Stemp. I'm from 121 Group. To start us off on this Nickel Day, we have our first session, which is a company update and an update on the exploration that has been ongoing at the company's flagship Ta Khoa Nickel-Copper-PGE Project in Vietnam. And to take you through, first of all, the company update, we have Scott Williamson, who is the company's managing director. And to take you through the exploration part of this session, we have Dr. Stuart Owen, who is the head of exploration at Blackstone Minerals. So without any further ado, Scott, over to you.
Thanks, Leo, and thanks to everybody for joining us online today. This is our inaugural Blackstone Nickel Day, and we are hoping to do this as an annual event and try and build it around some great news flow as we have today, which is our pre-feasibility study for the downstream business. So hopefully you've had some time to digest what was a major announcement for the company this morning, and we look forward to the questions through the Q&A part of this online event. So make sure you use the Q&A box to ask for any questions that you would like answered by our panelists today. As a lot of you may already know, we have an opportunity here that is once in a lifetime, once in a generation, to leverage off the significant demand that's coming from the lithium-ion battery industry for the electric vehicle, a movement towards a high nickel cathode, which we were very lucky that we were given that insight from our downstream partners, EcoPro, nearly 3 years ago. We went on this journey towards a high nickel downstream product when we acquired the Ta Khoa Nickel-Sulphide district and the Ban Phuc nickel mine, which was the previously operating mine. And we now have a district scale nickel sulphide opportunity, and we'll talk more about that with Dr. Stuart Owen. We have a number of targets that we're working through systematically. As you can see here, there's the demand that's coming for the high nickel cathode. As an industry, we need over 1 million tons of class 1 nickel that we need to discover and produce and into these downstream products over the coming years. So as an industry, we have a big challenge ahead of us, and we think that this type of opportunity, like we have outlined today in our pre-feasibility study, is the future of the industry. We have a scalable and modular downstream opportunity. Today we'll be talking about our base case. We believe that this can be expanded, and we'll talk about the expansion case. But today we've really focused on the conservative base case, and then we'll look to scale this up. We will look to put this in other parts of the world as well. There's no reason why we stop in Vietnam. This is a modular approach which we can look to do in other jurisdictions, as long as we have that hydro renewable power or any type of renewable power that allows us to produce a downstream green nickel product. Just quickly on the corporate snapshot, well funded for the next phase, around $14 million at the end of the quarter. So well funded for this next phase of studies, and we'll talk about what the next steps look like. Well supported by our major shareholders, Deutsche Balaton, and we thank our major shareholders, EcoPro and Fidelity, who have been very, very supportive over the journey, particularly Deutsche Balaton. Over 3 years, we've had them supporting us, and they continue to buy on market and are being a real supporter of the business. We have changed the board slightly recently. We've introduced Miss Alison Gaines, who's a corporate governance expert and shows our commitment to highest ESG compliance. We also thank Mr. Jung, also from EcoPro, as our representative from South Korea. Today this is the first time we've talked about our values, and I'm very proud to talk about our vision and our values today. This is the first time that we've announced this. We are a passionate leader in the battery revolution. We will enable green solutions from mine to consumer. That is our vision, and we are, I suppose, underpinned by our values, which is agility, unity, transparency, and integrity. And they they are the values that drive us to these ultimate goals, which is to produce a green nickel product from our downstream business in northern Vietnam. Just quickly on the ESG, we've just introduced Anna Cranny, and she's done an amazing job on focusing the group on highest ESG compliance. We're looking to publish our inaugural sustainability report this year. We've done a lot of work on developing and implementing our ESG strategy. We're doing a lot of interviews at the moment of all of our different stakeholders and understanding our base case and where the areas that we need to work on. And we're looking at a task force for climate-related financial disclosures pathways. So we're doing the gap analysis to basically achieve highest ESG compliance over the coming 6 to 12 months. And we look forward to announcing more on this over the coming months. Just on our strategy, I think everyone is aware that we have the downstream and the upstream businesses, and today we'll focus mainly on the downstream business after the exploration update from Dr. Stuart Owen. It's important to remember that we have the opportunity with this world-class nickel sulfide district to feed into the downstream business. We will supplement that with third-party feed from partners like Trafigura. Trafigura has been very supportive in this pre-feasibility study phase. We had access to a number of different concentrates from around the world. We will source concentrate from Australia, Canada, South America, and Africa. We will bring it into northern Vietnam and we'll upgrade it into these downstream products. We will look for alliance partners from the downstream and with groups like EcoPro and others. We will look for offtake partners that can also build alliances around concentrators. So we will talk to feedstock partners as well. So this is an alliance-driven strategy, and that will drive our funding strategy as well. So we'll look forward to, I suppose, more news flow on how we structure this business going forward. Just on some of the timelines. So this is the milestones for the upstream business unit. We're aggressively drilling out these different ore bodies, and we'll talk more about that with Dr. Stuart Owen. We're moving into the pre-feasibility study phase for the upstream later in the year. Then the next, in 2022, we'll be focused on the definitive feasibility study. We'll look to restart the existing concentrator and then move that into commercial production at the same time as the downstream business unit. So you can see here, major milestone announced today. We have announced the pre-feasibility study, and we'll be talking more about that in the second session today. We now move into the definitive feasibility study and pilot plant phase. This is a really important phase for them to work closely with our downstream partners on achieving the specs required for their different product mix. We will bring them into this pilot plant phase. We'll also bring in our offtake and feedstock partners. We'll continue to move these concentrates from our feedstock partners through this pilot plant phase. We've done a lot of work already with our feedstock partners, and now we push that into the pilot plant phase. And then towards the end of next year, detailed engineering and design after we lock in those offtakes, joint ventures, and we look to the final investment decision over the next 12 to 18 months. The build phase will be through 2023 and then into 2024, and looking to execute and deliver the NCM precursor products in 2024. And please make sure you put in some questions into the Q&A box. I'll now hand it over to Dr. Stuart Owen to give an exploration update. Thank you, Stuart.
Thanks, Scott and Leo. So Blackstone's current exploration and resource definition focus for nickel sulfides is within the Ta Khoa Dome of northwest Vietnam. The Ta Khoa Dome is part of a magmatic nickel-copper-PGE sulfide province that extends about 1,000 kilometres from North Vietnam into South China. The dome includes a mixture of massive and disseminated sulfide deposits that is typical of magmatic nickel sulfide provinces the world over. While nickel is the main metal of economic interest, all of the known deposits within the Ta Khoa Dome also include significant amounts of copper, cobalt, platinum group elements, gold and silver, but I will generally just refer to them as nickel sulfide deposits and targets. Around 2013, a 450,000 tonne per annum concentrator was built next to the Banfook massive nickel sulfide deposit near the centre of the Ta Khoa Dome, and the Banfook massive sulfide vein was largely mined out over the following 3 years. The plant was then placed on care and maintenance, leaving numerous identified nickel sulfide deposits unexploited and targets underexplored. Blackstone became involved in the project in 2019, and exploration activities to date have been focused on the exploration and delineation of nickel sulfide resources within about a 10k radius of the Banfook concentrator. Blackstone initially defined a 58 million tonne disseminated nickel sulfide resource within the Banfook ultramafic intrusion immediately adjacent to the mined Banfook massive sulfide vein. And Blackstone is now delineating resources for the adjacent Ban Kwa disseminated sulfide deposit, the Ban Chang massive sulfide deposit, the King Snake massive sulfide deposit, and the Ta Kung massive and disseminated sulfide deposits. The disseminated sulfide bodies within the Ta Khoa Dome are tens of millions of tonne resource targets, such as the 58 million tonne Banfook disseminated deposit. The currently known massive sulfide deposits are an order of magnitude smaller, but they are better grade, and there are quite a few of them. High-powered ground electromagnetic surveying has been a very effective tool in identifying massive nickel sulfide targets to drill test, and is a key method for Blackstone to efficiently explore the Ta Khoa Dome for nickel sulfide deposits. Blackstone currently has 2 high-powered EM systems deployed within the Ta Khoa Dome, searching for massive nickel sulfide bodies. The Ta Khoa Dome is a fertile province for nickel sulfides and represents a district-scale exploration and resource development opportunity for Blackstone. The Ta Khoa exploration pipeline for resource growth starts with conceptual targets such as Ko Muong, Soi Chang, Soi Hao, where ultramafic rocks prospective for nickel sulfides are recognised through surface prospecting. Some targets such as Ban Mong and Soi Fang have also had historic reconnaissance drilling that intersected nickel sulfides and need follow-up. Blackstone's routine is to methodically cover each target with ground-based EM prior to drill testing to maximise the chances of drilling success. To date, the massive nickel sulfide bodies have lit up wonderfully with ground EM, with very few false positives. After EM work, the targets are then drill tested in staged campaigns, and deposits such as Ban Chang, King Snake, Ban Kwa, Ta Kung are currently subject to resource definition drill outs. The Banfook disseminated deposit had been historically identified during the delineation of the adjacent Banfook massive sulfide body, and upon entry to the Ta Khoa project in 2019, Blackstone immediately began resource definition work at the Banfook disseminated prospect. 58 million tonnes of disseminated nickel sulfide resource was identified by Blackstone in 2020. Scoping work indicated very positive economic potential, and Blackstone has recently completed a PFS level resource geotechnical hydrological drilling that will form the basis of resource, metallurgical, mining and financial studies necessary to upgrade the resource and reserve confidence to PFS level. Exploration drilling focuses now on adding mine life through resource definition of deposits such as Ban Kwa, Ban Chang, King Snake, and Ta Kung, which we will look at briefly in a moment, and extending and identifying new deposits. The Ban Kwa deposit is an example of a disseminated nickel sulfide target that Blackstone is currently taking to resource definition. A multi-million tonne target that is expected to add significant mine life. Ban Kwa is just 1,000 metres north of the Banfook disseminated resource and hosted by a very similar peridotite intrusion. As highlighted by the magnetic intensity on this section, the Ban Kwa intrusion has a similar bowl or synformal geometry to the Banfook disseminated deposit. Ban Kwa is located on a hill just like Ban Phuc disseminated, so it's expected to be advantageous for strip ratio. The mineralisation at Ban Khoa typically comprises broad zones with a few percent sulfides disseminated in serpentinized peridotite. Example intersections include 32 metres at 0.76% nickel, 22 metres at 0.5%, and so on. I have not mentioned copper and PGEs because these were not historically assayed at Ban Khoa and present obvious upside. The Ban Chang massive nickel sulfide deposit is located 2 to 3 kilometres southeast of the Ban Phuc concentrator and was the first massive sulfide target to be drill tested by Blackstone. Resource definition is nearing completion at Ban Chang. Ban Chang typically comprises a narrow, massive nickel and copper sulfide veins like the stick of core shown in the upper right photo, within an ultramafic dike with the disseminated semi-massive nickel sulfides like that shown in the lower right photo. The mineralisation typically comprises 10 to 20 metre zones with modest nickel grade representing a combination of the disseminated semi-massive and massive sulfide mineralisation with a high-grade core of massive semi-massive sulfide material a few metres thick. For example, Ban Chang 2110 shown on this map has 15 metres at 0.72% nickel, 0.5 copper, 0.36 platinum plus palladium plus gold. And within that, there is a core about 5 metres thick with massive veins that grades 1.67% nickel, 1% copper, and 0.95 grams per tonne platinum, palladium plus gold. The King Snake massive nickel sulfide deposit is about 1 kilometre to the north of the Ban Phuc concentrator and is adjacent to the Ban Khoa disseminated sulfide deposit I talked about earlier. The first stage of resource definition drilling is nearing completion at King Snake. King Snake mineralisation typically comprises a single or several narrow, massive nickel plus copper sulfide breccia veins, intruding sedimentary host rocks of the Ban Phuc formation. The photos on the right show a couple of examples of King Snake massive sulfide breccia. The left one of the photos on the right show inclusions of the sedimentary wall rock. There are a few places like Ban Chang, where the massive sulfide veins at King Snake are flanked by ultramafic dike with disseminated nickel sulfides, but most of King Snake comprises these massive sulfide vein breccias in the metasedimentary host rocks. The King Snake has the highest platinum palladium grades of the currently known Ta Khoa deposits, with intersections such as King Snake 21 on the long section here with 2.6 metres at 1.5% nickel, 2% copper, and 5.2 grams to the tonne platinum, palladium plus gold. The Ta Khoa nickel sulfide deposits are about 6 kilometres northwest of the Ban Phuc concentrator and include a mixture of massive, semi-massive and disseminated sulfide zones within an ultramafic dike swarm adjacent to a small peridotite body. The first stage of resource definition drilling is in progress at Ta Khoa. The long section here shows the peridotite intrusion in the northwest, that is the left of the section, which includes broad zones of low-grade disseminated nickel sulfides flanked by a tremolitic ultramafic dikes with semi-massive and massive nickel sulfide. The discovery hole at the eastern taipan zone, highlighted on the long section, within the ultramafic dike swarm included 20 metres at 1.35% nickel, 0.8% copper, and 0.7 grams to the tonne platinum plus palladium plus gold. Thanks, and back to you, Scott.
Thanks, Dr. Stuart Owen, and thanks to everybody for the questions. And we're getting a heap of questions already. We'll just try and tackle some of the questions so far that are relative to the first session. There's one question here around the COVID situation in Vietnam. What we can say is that most of the outbreak in Vietnam at the moment is in Ho Chi Minh City in the south, where we are located in Hanoi and Son La. We have much lower cases, and we are currently in lockdown in Hanoi. The team is still operating efficiently out in Son La, very low cases out in Son La. So we haven't had any issues with the drilling that it's ongoing. We've got 8 or 9 drill rigs still operating. The team is operating safely. We've actually vaccinated a large number of the team members already with their first dose of the AstraZeneca. So we're well on top of the situation. It is much worse, unfortunately, in the south around Ho Chi Minh City, but in the north where we are, it's very manageable, and we're very lucky that the northern region is much easier to manage, and well, we're on business as usual from a exploration perspective. Question here around the share price after the PFS release. Obviously, we can't control the share price. We're just doing our best here at Blackstone, so I won't bother with that one. The next question is around the funding strategy and the concept of potentially not using brokers, or potentially using our major shareholders and or our strategic opportunities. And as we've made it very clear over the long sort of period we've had with this strategy, is that we will look to strategic opportunities similar to what we did with EcoPro 12 months ago. We have a number of these opportunities to bring in strategics and continue to work with our strategic partners, Trafigura as well. So we see a number of these opportunities to raise money through strategic relationships. We obviously we do have access to a significant amount of capital, but as major shareholders ourselves and board of management, we'll do what's in the best interest of the current shareholder base. One of the questions was around the PFS for the upstream and whether that is required to commence the downstream DFS, and the answer is no. We're committed to the downstream as a separate business unit. The upstream PFS is slightly behind, but it is not a requirement for the downstream funding and the downstream DFS and pilot plant phase. That pilot plant phase is a really important part of the next phase of funding and strategic alliances. So we will continue to aggressively push on with the downstream DFS and pilot plant phase, and that will unlock what we believe will be these strategic opportunities to work closely with our alliance partners, both from a feedstock perspective, but also from a downstream partner perspective. So so that a number of questions around the funding strategy, and it's important to understand that this is an alliance partnership model. We will work very closely with our downstream partners. We see a significant demand coming, particularly for these high nickel cathode precursor products, and we're looking to do that to a highest level ESG compliance, and we believe that will put us in a very strong position coming over the coming years. There is one question here. I might hand over to Dr. Stuart Owen about the difference between a disseminated and a massive sulfide ore body, and what that might mean for particular tonnages, and what that might mean for our 450,000 tonne per annum concentrator, which we're looking to restart. Thank you, Dr. Stuart Owen.
The disseminated sulfide deposits are low to medium grade, but large scale. That is tens of millions of tonnes and larger. So obviously something that's going to give you plus 10-year sort of mine lives, hopefully much longer. The massive sulfide deposits identified in this district state are generally the order hundreds of thousands of tonnes to a few million tonnes. That's not to say that we're not going to find something in the many or tens of millions of tonnes range. It just hasn't been found yet. The obvious, even the small ones are much better grade than the disseminated deposits. And as we work forwards with our exploration efforts, they seem to be quite numerous. So good things to be looking for. And of course, there is a possibility at any time, as I mentioned before, that we'll find a really large one. The compositions are much the same as the Banfuk massive sulfide deposit that fed the concentrator just a few years ago. So we're very interested in exploring for these sort of deposits, and can easily imagine a scenario where we just turn the existing concentrator back on. It's suited for these sorts of ores, and we start feeding in the massive sulfide ore from several of these deposits that I just outlined earlier. Back to you, Scotty.
Thanks, Dr. Stuart. A number of more questions coming in around the funding strategy. So with EcoPro, we are talking about potentially bringing them in at the downstream level only. We're looking to a partnership at the downstream level. We haven't, I suppose, we haven't got to that point where we've decided what capacity they would require yet, but we're working through that. There is, we believe, room for multiple partners. And we're talking to almost all of the top 10 high nickel cathode developers and producers in the market. So we are talking to all of the major players through Japan, South Korea, and Europe. And we believe that there is room and demand for multiple trains to be built here. And we're very focused on our expanded case, which we haven't put the numbers around today, but in the background, we're very focused on what we believe could be the 80,000 tonne per annum 4-train scenario, and we believe that the demand is definitely there for that. So as long as we can feed the nickel concentrate into that demand that's coming, there's no reason why we wouldn't jump to the expansion case. And we believe the funding will be there, and the funding will come from these major players in the industry. We've seen some big numbers coming through from the likes of LG, and we believe that we will benefit from that flow of capital that's coming from those major downstream players. So I might sum it up with I thank you for the first session. We'll now look to bring Leo to introduce the second session, and please keep the questions coming. And thank you, Dr. Stuart Owen, for your help today. Thank you.
Well, thank you very much, Scott and Dr. Stuart Owen there for that opening session. We're now moving on to session number 2, where we'll be hearing from Blackstone Minerals' technical team on the downstream pre-feasibility study that was released this morning. And the team will also talk about project delivery for the company's flagship Ta Khoa Nickel-Copper-PGE project in Vietnam, which has been introduced to you there in that first session. And to take you through this session, Scott will be joined by Andrew Strickland, who is the head of project development at Blackstone Minerals, and Tony Tang, who is general manager for project development focused on downstream. So Andrew, if you'd like to start your presentation.
Cool. Thank you very much, Leo. Yeah, appreciate your time, everybody, today. It's my pleasure to present the results of the Downstream PFS to you all. I hope you've had the time to download and review our PFS announcement that was put out this morning. Some of the headline figures are just summarised on the screen at the moment. Firstly, I just want to point to the 43,500 tonnes per annum thousand output from our 2-train 400,000 tonne per annum feed refinery. The output will be equivalent to 85,600 tonnes per year of NCM 811 product. This is coming from an overall project pre-development capital cost of US $451 million. This overall yields an overall project NPV of $2 billion with an IRR of 67%, with a project payback period of just over 1.5 years. So while it's I feel lucky to be presenting this to you today, we have a significant team that's helped contribute to this study over the last sort of 12 months. So firstly, I'll just talk through some of these key contributors now. ALS Metallurgy in Balcata has helped contribute through the upstream metallurgy and test work preparation, really with respect to preparation of concentrate samples for downstream testing, so including crushing, grinding, and other prep work. Banfuk Nickel Mines, our subsidiary in Vietnam, has also provided all the Vietnamese salary expectations as well as organisational structure expectations, local contractor pricing and consumables, as well as project permitting planning. The Blackstone team has been responsible for strategic planning, operational readiness and implementation planning. ERM, an environmental group out of Hanoi, has actually helped us with our environmental baseline study plans and recommendations. Fremantle Metallurgy have also helped with respect to dynamic thickening test work on the hydromet process. So that's for any of the residues are coming from the POX facility and also any of the products that we produce. Optimized Group, another engineering firm who've helped assist with project infrastructure design and implementation planning. Now, a lot of the heavy lifting was done by Simulus engineers and Simulus laboratories. So they're responsible for all the hydrometallurgical test work, as well as the refinery design, plant engineering, capital costs, operating costs, project development schedule, and a big part of the risk workshop. And finally, Trafigura has helped through a provision of third-party samples, which were a part of our hydromet test work program. These were obviously used to help develop an overall feed blend for the PFS study. So just talking through a few more of the highlights, the operating highlights. So this has been based around a 10-year operating life, which is aligned with both the Banfuk disseminated ore body from the scoping study previously announced last year, and also the availability of known third-party feeds through discussions with potential third-party providers and Trafigura. The overall, as mentioned a couple of minutes ago, annual production of nickel is 43,500 tonnes per year in 85.6 thousand tonnes of NCM. First production of NCM is targeted in 2024 with a ramp up to steady state in 2026. There will be overall 3.9 million tonnes of concentrate fed over the 10 years with an average grade of just about 11.5%, including cobalt and copper as well. Real key economic highlights. So as I mentioned, $2 billion NPV and IRR of 67%, upfront capital of $491 million paid back in just over 1.5 years. Life of operations revenue of $14 billion with operating cash flows of $4.5 billion. Annual operating cash flows of $451 million and also annual post-tax cash flows of $365 million. This yields us a life of operations all-in costs of about just under $12,000 per tonne of NCM 811, which is, which shows quite a healthy margin when compared to the average forecast sale price of NCM of $16,400. Okay, so I just want to quickly give a bit of a rundown of the overall strategy for the PFS. So the PFS itself has treated the refinery as a standalone business. So there's no links to the upstream in the fact that all concentrate has been assumed to be purchased from the upstream mine at market rates. So our overall strategy for the refinery is to find sources of concentrate, which we can then use to develop and make our NCM. We will always prioritize the concentrate to be fed from our own mines, given the fact that we have surety of supply over those feed and we have control over the blend and the timing of the supply. We then also prioritize any of our third-party partners' feeds. And then finally, at the end, any purchased on-market concentrates, such as like with Trafigura. The overall base case for this study has been based around the 400,000 tonnes per annum feed. As Scott alluded to earlier, we've also looked at an 800,000 tonne per annum case, but we won't be presenting the results of that at the moment. We completed that work really just to focus, to give us the optionality to expand the refinery should we get the sufficient support from the NCM off-takers as well as third-party feed suppliers. So we have that one ready. A little bit more about our overall feed for the PFS. So the Ta Khoa refinery is based on 400,000 tonnes per annum feed at 11.5%. So our feed sources have basically come from the Banfuk disseminated sulfide feed as per the 2020 scoping study, which is about 200,000 tonnes per year feed. A second feed source would be our Ta Khoa massive sulfides, but at this point in time, these are not at a resource level that we can include in a PFS study. They will be included at a later date. So this includes King Snake, Banchang, and Ta Kung, and any others that are identified in the future. Trafigura and other third-party feeds with a makeup up to the 400,000 tonne per annum total feed for this PFS study. I guess our final a final feed source, which isn't really addressed in the study because it's going to be sort of investigated further and developed over the coming months and quarters, is additional third-party feed. So Blackstone is going to continue to source third-party partnerships and joint ventures to help us bring feed to the table for this refinery. Our hydrometallurgical flow sheet actually gives us a real strength around being able to identify new nickel concentrates which maybe are not marketable to smelters due to maybe having too low a nickel grade or issues with deleterious elements such as MgO and arsenic, which we are actually able to deal with through the our current flow sheet. So talking a little bit more about what we're going to do in our production profile for the PFS. So first up, we have the Banfuk disseminated feed. As it sits here, it's just under 200,000 tonnes per annum. But this will be the focus of the upstream PFS over the coming months. As I mentioned by Dr. Stuart earlier, we have nearly finished we've almost completed the resource. We've completed the resource drilling and almost completed the resource modelling for this upgrade. The ongoing works for the mine modelling will include optimisation of the preferred concentrate grade. We can consider higher grades and lower grades, but really it's going to come out to what give us the best overall balance and blend for the downstream facility. The makeup of the feed then is our third-party feed. And that brings us all the way up to the full 400,000 tonnes per annum for the rest of the operating life. And I should mention that while the PFS is based on a 400,000 tonne per annum feed profile, in reality, this is a refinery. We're going to look to keep this refinery full as long as there's feed available for it. So as long as there's nickel in market and there's a demand for NCM or any other products that we actually be able to convert this refinery to produce in the longer term, we'll look to continue to keep this open. So there's a great opportunity for life extension as we secure additional feed, but for the purposes of the PFS, we've just kept it quite cleanly on the 10 years because it aligns so well with the Banfuk disseminated feed profile and also our third-party feed supplies that we've been discussing. So overall, the overall grade for nickel in the feed sits just over 11.5% for the life of this operation. One of the major developments through the PFS study has actually been our location study. So Blackstone engaged a Vietnamese company to do a broad-ranging review of all potential locations in the north of Vietnam. And after that review, there were 5 locations identified. There was the My Son industrial zone in Son La, which was addressed in the scoping study. There was the Son Tin industrial zone, the Tan Phu industrial cluster, the Mong Hua industrial zone, and also the Nam Dinh industrial zone. Each one of these areas, the team in Vietnam liaised with and had meetings with both community groups, industrial groups, and the local government to see how well they are accepting of the project and see what locations they would suggest and the availability for a key issue being residue storage. And so an overall study looked at multiple different factors, which are listed on the bottom right-hand side of the sheet there, and then assessed qualitatively for us to try and determine where the most suitable locations were. The results of this study indicated that we really should be looking in Son La or Phu Tho provinces, which are the 2 highlighted areas on the chart. These both offered a strong balance of government support, also residue storage and logistics. So there were lots of different strengths that each of these options had, and these were head and shoulders above the rest. I guess the key aspect of both of these were the fact that they were very close to hydropower sources, which is a key aspect of our green nickel development strategy. So as we cross over to the processing design, I'd like to hand over to my colleague, Tony, who can talk us through our flow sheet.
Thank you, Andrew, and thank you everyone for joining today's session with us. It's a pleasure and opportunity for me to share with you that I'm working very closely with a similar team to develop this conceptual flow sheet. As you can see, it simplifies what we were doing from our concentrate to the final product. So the first section on top, we consist of the concentrate handling and blending, and then we have the pressure oxidation leach, That's where we concentrate with the recycled process water, and then we pump that into the autoclave, which is pressure oxidation, roughly between 180 to 210 degrees Celsius. Because it's a nickel sulfide, when we inject the high pressure oxygen, it forms oxidation reaction and it generates heat and sulfuric acid, and that's when the leaching process is occurring. As we go through the autoclave, it's roughly about 60 minutes resting time, and it gives greater than 95% extraction. And then the slurry will be discharged, so we got a flash vessel there. And then there we got the steam coming out, which is we recycle back to preheat our slurry. And the slurry coming out with very low free acid in the leach discharge, where we can pulling it down and then put into pressure filter. Where this pressure filter, we can remove the residue and wash, countercurrent washing them, and the residue can be dry stacking in the residue storage. The liquor is clean comparing to the conventional CCD. We have larger footprint. We're using pressure filter. The liquid will be quite clean. Then that leads next to the next stage of the process is the copper stone extraction, and where we slowly separating our metal tanner in a solution containing copper. We're using stone extraction. And once we've done the stone extraction, the raffinate, the aqueous solution will be mostly free of copper. And the copper will be loaded into the organic, where we strip the organic, and the organic will be fed to the electrowinning cell, where we will produce the copper cathode, where we can sell as one of our products. The raffinate will be contained free of copper. We come to the next flow sheet. We're using slurry pre-neutralization to neutralize the acid that we generate during the stone extraction. Thereafter, we're adding magnesium oxide to precipitate our MHP, mixed hydroxide precipitate. This is where we get our nickel concentrate up to roughly about 40 to 50% of nickel content. Through that process, we're doing the liquid solid separation, where we generate the magnesium sulfate solution, we feed to the cassiterite, which is magnesium sulfate, and the product there is our byproduct and can be used as the fertilizer for the industry. The MHP solid is then countercurrent washed and cleaned. Then follow to the next flow sheet is we are doing selective leaching of the MHP, where we're going to dissolve our available nickel, cobalt, manganese back into the solution with sulfuric acid. From there, we're going to using some extraction. This is where we continue to purify our solution. So the solution coming out from this process is roughly about 100 grams per liter of nickel. And then we start removing our cobalt and excess trace of copper, zinc, aluminum that we didn't get removed previous stage. This is where we remove. So the raffinate coming out from multi-stage stone extraction will provide us pure nickel sulfate solution. And then the organic matter we selectively stripping so we can recovering our cobalt and manganese. At this point, the solution, the feed solution for nickel sulfate, cobalt sulfate, manganese sulfate, then can put into a storage tank, and the relevant amount of nickel, cobalt sulfate and manganese sulfate will be topping up to produce adequate solution for us to do a mixture for NCM. So once we got the pre-pure solution, we mix them into the NCM stock solution, whether it's A11 or 622, depending on our end user. And then from there, we have multi-stage precipitation with long residence time, allow the particle to precipitate. And after a period of time, the particle is right-sized and correct quality, then we're going to do a solid liquid separation. And from there, the liquid we go back to regenerate for our acid and caustic, and the dry solid wash and clean will be going to the dryer and packaging. And so what I will discuss next will be our methodological test work and stimulus. So for the pressure acid leaching, as you can see, some of the features of our concentrate, the autoclave that we use in the process, the dynamic thickening testing, and the pressure filter. So from the table, as you can see, there are a number of tests we have done through our blend. So the first 3 tests is we testing the temperature, 180, 220, and 230. The 50% of solid is roughly about 15% solid. As you can see, the extraction is quite indicate quite high. So for that, we need to make a large stock solution with using 230, and we make the 2 large quantity for the further test work at 15 liters autoclave. And the following graph is showing the extraction of the nickel, cobalt, and copper. So after roughly about 90 minutes, you can see it's in excess of 90+%. So following to that, we have the immediate MHP. So over here, after we've done the solvent extraction for the copper removal and pre-neutralization for MHP, as you can see, the 5 pictures there. The first one is the MHP precipitation. Second picture would be the dynamic thickening. And the third one is the thickening underflow. And the thickening flow follow that is the filtration. And the filter cake is the final nickel, where we get roughly about 49% nickel content. And the graph is represent the precipitation of the metal, available metal like nickel, manganese, cobalt, as it's all excessive in the 90s. So after that, we further process to the NCM. So here you can see the setup for our NCM precipitation. So after we've done the MHP, we're doing selective dissolution and purification and making the correct solution purity and the concentration. So with on the left there is the setup continuous precipitation. As you can see, the next picture is the reactor of allow the precipitation curing, and the 4 tube sample here is the intermediate sample, and the last bag is when you put this residue wash and dry, and then that's the color it changed to. That's a typical NCM color. Down the bottom, you can see the nickel concentration in the solution in the feed. It's quite pure and clean. And then we have our reagent used in the precipitation. And finally, as you can see, the residue precipitate is showing very small amount of the impurity has been reported into the solid, and the feed rate as per expected. So to summarize the methodological test work, by strategic blending and understanding our mineralogy of our concentrate, we have reduced acid requirement for our pressure oxidation, and therefore we don't need the acid plant for this process. We only need to top up as required, so there will be acid storage. The indication we have so far for the test work, we have high metal extraction, as well as the discharge of the POX is very low free acid. Hence, the neutralization is also very minor, and therefore producing very small amount of residue. The high metal channel solution in the POS is a key point compared to other process, roughly about 20 to 25 grams per liter in the solution. Then it helps us to go to easy to perform the copper assays. And after that, we have high quality MHP as indicated previously. And we also done the test work on the selective MHP releaching. We're producing quite high purity solution, and all the remaining solid is remaining impurity remaining solid. The selective stone extraction were challenging, but we're producing high separation of the nickel sulfate, copper sulfate, and manganese. With the organic of the stone extraction for the selective stripping, they were also another technical challenging. With the MHP precipitation, we have achieved a 99+% of purity on test work so far, and we are currently still further improving the purity. So what do we mean by green nickel in the process? It's so important that we look into how we can improve our carbon footprint. So nickel sulfide is a high concentrate feedstock, and it self-generate energy as well as acid. And we building our plant in Vietnam, so we actually create a vertical integrated process, so it's within distance. As well, we have access to renewable power from hydro plant from Sơn and Hòa Bình. The pressure oxidation is a very clean process, as I mentioned. It's still energy generate and still acid generate. One of the key things that we don't use a lot of natural gas and fire energy, so we start also removing fossil fuel in our plant and also the mining fleet. For this is our corporate commitment to the ESG. So the next slide is to illustrate the technology. This slide is showing the three typical processes that we have known used for the nickel processing. So for our process, is hydromet, pressure acid leach, also hydromet, and then the pyromet, which has been around for a long time. The feedstock for our process is roughly about 10%, and the HPAL is roughly 0.8 to 1.5. Pyromet ideally greater than 10%. Typical mineral type for our process is sulfide concentrate from sulfide ore. Previously from Western Mining, now Nickel West, their ore is from nickel mate, also the nickel sulfide marmorine, also a intermediate product MSP. The HPAL is typically is oxide ore, and the pyromet is high grade nickel oxide ore or typical sulfide ore. The extraction condition for the epoxy is between 150 to 210 degrees Celsius with high pressure oxygen injection. The HPAL up to today typical is between 250 to 270 degrees Celsius. High pressure steam required. High acid consumption typically between 450 to 700 kilograms per ton of ore for acid consumption. The pyromet, in order for this to work, you have to operate at 1100 to 1700 degrees Celsius in the furnace. It's very energy intensive and also required code. The capital investment, as you can see from our presentation, it's a popular club. We don't use exotic material. We can actually use carbon steel, metal, and ceramic mining. Whereas for the HPAL, you need to use exotic material like titanium, different grade, or rather grade 4 to grade 17. You require an acid plant, sulfur burning acid plant, or a big supply of acids. And then you need a high steam boiler if you haven't got the acid plant. and you have big steam boiler require a lot of energy to generate steam to producing 60 to 80 bar pressure. Very large equipment, as where you can see the feed grade coming in is roughly about 0.8 to 1.5%, whereas for the epox, you can treat as low as 10%, as high as 35%. And therefore, the size of the equipment will be a lot larger in HPAL. As for the pyramid, the capital investment is relatively low to medium. The data is dependent on whether you're using a coal-fired system or electric furnace. The technology for the pressure oxidation has been around since 1960. Sherritt International built for Moa Bay in Cuba in the 60s. And in WA, we have Nickel West in Kwinana, and recent time, Maraman, where I work, we got a 36 area 3600 where we released the MSP, and the technology is not as high risk as a HPAL because it doesn't consume a lot of steam. You don't have to treat a low grade and high preheating system. You need three stage preheating before you get the temperature to 220 to 230 to inject the autoclave. This one we only need roughly about 150 degrees Celsius to inject the autoclave. So the HPAL is only been established in the mid-90s for the second generation. It's still high risk, as I just discussed. The preheating is very sensitive to your feed blend, your calcium, your magnesium, and your feed grade due to what percent of solid you can feed into the autoclave, typically roughly between 30 to 40% solid. The technology for the smelter, of course, has been around for many years, so therefore it's low risk. For sensitivity, as Andrew said early on, we can, for our hydromet process, we can handle a little bit of a wider range of magnesium as well the arsenics. Typically, arsenic in the furnace it would come into the vent into the gas, and that is toxic. Whereas in our process, the arsenic will remain in the solution, then precipitate out together with solid. The sensitivity acid consumption is very important in the HPAL. As I mentioned early on, ranging between 450 kilograms up to 70 kilograms per ton, depending on your iron and your magnesium and calcium. The waste residue, for our process, we have optimized our feedstock and our process. Our residue discharge will be quite almost see-through, and also we can reuse it or repurpose for other. And we are currently investigating this and in the upcoming pilot plant. Whereas in the HPAL, your discharge will be between 50 to 75 grams per liter of free acid in order for your solution to remain in the solution. This requires a lot of nutrients like limestone, lime, calcrete to neutralize the acid before you can pump your leach residue to tailing, and therefore your tailing generate quite a lot. Typically, my experience around about 200% increase in your residue. Whereas for the pyramid, once you got your thermal furnace profile, you got your valuable nickel. The remaining will be your waste is quite low. However, it's hard residue slag, and the environmental and the treatment for it is not simple.
Thanks, Tony. So this slide at the moment just gives us a bit of an overall look at what this actually looks like in real life. So I'll quickly just bring up the laser pointer, see if it helps give you a bit of an idea what we're looking at. So starting at the top here, this is our concentrate receiver. So we have container tippers feeding through a rolls crusher, basically into our concentrate storage shed. So you can see 4 bays here. And this is to enable us to receive 4 different blends at any given time to create the optimum feed blends feeding into the hydromet plant. The first area we see here is our autoclave facility before coming through into the copper solvent extraction and copper electrowinning. You can see just to the bottom here, this is the residue discharge area where it will be emptied into your stockpile before being handled into a truck and disposed of in the residue storage facilities. As mentioned earlier, we're going to be looking at other options to deal with this, and I'll talk about those on in the coming slides. Following on, we come into the MHP precipitation area. MHP precip is then filtered before feeding into the refinery block, which I call it. This later part of the process. We have the MHP releach before the copper manganese solvent extraction area, before we're getting into the NCM precipitation and bagging and handling area at the back here. The area to the bottom here is actually just the acid regeneration area, which is where we're recovering some of our reagents, and then reagent feed at the front end here. Now, as mentioned earlier, we actually have completed the PFS for an 800,000 tonne per annum feed, which is the 4 trains. And it's interesting to say that the 4th train case actually doesn't use a larger footprint. The way it's been laid out, it's basically a mirror image of the 2 train case and can fit basically on the same footprint with the same area. This is important as we come to the next slide because you can see on the slide here, this is our actual plant layout on one of the locations that have been provided in our study, trade-off study for the plant site location. This is in an existing industrial cluster, and that's important because an industrial cluster is kind of like, a industrial area like Kwinana. It's already permitted from a industrial production facility perspective. The environmental permitting requirements are far less. So in terms of the ability to develop this within time, this actually really contributes to our production to meet 2024 as our first NCM production. I'll just talk through some of the infrastructure we have here to give you a bit of an understanding about sort of the scale and where we're at. So firstly, at the bottom, we have our 2 residue storage facilities. This one's cut off. You'll see it on one of the following slides a bit more clearly. But these are both within a very short distance to the actual main refinery. The refinery's been laid out in a way to really minimise vehicle interactions, where all residue trucks will come out the bottom before coming out to the back of these areas here. And as mentioned earlier, so these areas were proposed by the local government as potentially they're unused valleys at the moment, and hope that we might be able to make some use out of them in the future. Following from that, we have our main access road. We've added a new road in to keep the majority of concentrate delivery trucks away from any villages and densely populated areas, to keep it coming in the back into a back way and through unused land, or relatively unused land. I think there's a little bit, not too much. We then talk about, look at the container storage area. This container storage area is providing us surge capacity and lay down for containers as they're coming to site. This is important for us to maintain our feed blend and then deal with any process upset issues through to any potential contaminants or incoming issues with concentrate. We then also have our water catchment and store and services, which is pretty straightforward. Now, the main general administration buildings, laboratory and maintenance area is up the top here. Before looking at the main accommodation facility for our employees and our kitchen and mess facilities for workers who are going to be coming in for their lunches. So talking just a little bit about our residue facilities. As I mentioned earlier, we have some areas that have been identified by the government and they would prefer for us to use, but this is really our contingency plan. Blackstone's goal is actually to explore opportunities to reuse and recycle this residue. We've commenced discussions with some of the local brick makers who may be willing to take some of this material off us to use in their brick making process. But ultimately, should this not be successful, we've based the PFS on the contingency plan, which is to establish conventional valley-filled dry stacked residue facilities. You can see there's 2 facilities here, residue facility 1 and residue facility 2. Residue facility 1 is by far the larger of the facilities, and residue 2 is probably only going to be needed if required, if we find additional feed. Residue storage facility 1 can take the entire feed for the 10-year life proposed in this PFS. This brings us to the overall project capital cost estimate. As mentioned earlier, the total pre-production capital is $491 million. This is made up from the $245 million for the processing plant, with $16 million for site infrastructure. Residue storage facilities are a further $8 million, with the owner's direct costs for $43 million. The owner's direct costs include things like connection to local power supply, the hydro plants, site preparation, purchase of mobile plant, and also first fills. The next area is the EPCM. EPCM at $51 million is based on industry standard AusIM factors for 20% at this stage. As we go into the DFS, sort of these EPCM costs, or owner's costs, will look to be detailed much further. And then contingency is applied on a total of 20% basis for the total pre-production capital costs. We've then also allowed a sustaining capital of $143 million for the life of the operation for 10 years. This is based on a proportion of capital, but allowed for increasing allowances for sustaining capital over time to reflect the fact of the aging facility. This is a key factor because, as mentioned earlier, the refinery has an indefinite life, and so as long as we're willing to pay this sustaining capital and also find concentrate for it, there's potential for this to run indefinitely. We've also allowed a large closure cost allowance. This is based on experience with rates, experience in other projects that we've worked on, and also with consultation with local people, local governments and local communities about what the final state would need to be for closure. So this occurs at the end of the overall, obviously at the over end life. Some projects, you have them prorated over life. This has all been applied after the following year of operation, as is shown here. Operating costs. So the following slide is probably going to help make this a bit clearer, but it's worth talking through some of the large numbers here. So looking at the first column, this is looking at the life of operation total. So total purchase for the life of operation of nickel and cobalt concentrates, including purchasing concentrates from Ban Phuc, is total of $6 billion. On top of that, your refining costs are $3.5 billion, which includes purchase of cobalt and other feedstocks for the refinery. Logistics make up a small $118 million, and then the other costs are really rather inconsequential as a comparison. Like the key point that really this slide makes is that purchase of nickel and cobalt in our concentrate is by far our largest operating cost. It makes up about 90% of our costs. Now, how did we come up with the cost of this? So we actually engaged an independent expert to help us determine for our own concentrate from Ban Phuc and then third-party concentrates what realistic and fair prices should be allowed. So this is talked about more in the next session. So I won't go into any more detail on that, but that was the source of that pricing. Further that, then the next costs really are come to cobalt supply price and manganese supply price. So we spoke to Benchmark and got a forecast for cobalt sulfate supply, which has been included in our overall modelling, and then manganese sulfate, which is much lower cost, but that's still quite major, was sourced from local providers in Vietnam and China. I think this is a good slide that shows the overall operating cost breakdown. You can see by far the 90% of all our operating costs are made up by concentrate purchases and cobalt sulfate. The other 10.9% is really made up by our other reagents, manganese sulfate, maintenance and logistics, and power. Labour coming in a very low 0.3%, site G&A 0.3%, and residue storage handling costs of 0.2%. But this really highlights how much of this actually adds to our discussion regarding this being a margin-driven business. A lot of our costs are not in the operating of the refinery. It's been about the purchase of our concentrates to convert that into our NCM product. Now we get into the juicy numbers of the overall PFS. So the annual capacity of refinery is 400,000 tonnes per year for a 10-year life. This gives us an overall concentrate feed of 3.89 million tonnes. Why is it not 4 million tonnes? So we have an operating ramp-up period for the first couple of years. And so that results in slightly less tonnages in those first few years. We have a nickel in concentrate grade of 11.5% with 0.3 cobalt and just over 1% copper. Metallurgical recoveries are very high. This is reflected in our metallurgical test work program and the work's done at Simulus with 96.8% nickel recovery into NCM. And a big part of supporting this 96% into NCM is the fact that our downstream circuit includes the ability to recycle 25% of any of our off-spec product to make sure that our product's meeting the stringent NCM product specifications. So that's how we're keeping such a high recovery. With respect to byproducts, and so we've put out a couple of public discussions regarding the platinum group elements and also the green hydrogen. So for the purposes of this PFS, copper has been included and it's been treated as a byproduct credit to the cost rather than a cash flow. And PGEs have been excluded pending the final study, which is ongoing, and as has the green hydrogen, which is part of an ongoing study. It is Blackstone's plan to incorporate both the platinum group elements and the green hydrogen outcomes into the later coming downstream update study, which will occur after the upstream PFS later this year. I've mentioned kieserite as well as another byproduct that's getting produced. This is currently included as an output and costing for logistics of it. There's no value been attributed to it at this point in time. So overall production for the life of mine, so life of operation, is total NCM of about 850,000 tonnes. With annually about 85.6 thousand tonnes per year. Bringing us through to the project economics. So total revenues from NCM for the life of this operation is just over $14 billion, using an average realised NCM price of $16,400. This gives us, this is including an overall C1 cash cost of $11,125, coming back with an all-in sustaining cost of just shy of $12,000. This gives an overall annual operating cash flow of $451 million and a net cash flow post-tax of $3.6 billion, using an 8% discount rate, an NPV of just over $2 billion and an IRR of 67%, with capital payback of 1.5 years. I'll touch on the sensitivities here from a project perspective. I think it's quite interesting, and Danu is going to talk about them in more detail shortly. But by the tornado chart on the right, you can see that the NCM premium is probably the key sensitivity. Now, when we talk about an NCM premium, the cost of NCM that we've modelled in this is based on the constituent elements, which is the nickel, cobalt, and manganese, plus an allowance for a premium that the market data has shown to exist for the last 18 months, which has been pretty much the total life of this product. We have assumed a premium of 20% as the base case, which is pretty much the lowest premium that's ever been experienced in this market. The current premium is actually in excess of 40%. But for the purposes of sensitivities, we thought it was prudent to start with the 20%, and we've run the premium down as low as 0 in that top bar chart there, and then up to the 40% now. What I think is probably most interesting is the fact that nickel price is sitting way down here as fall from the bottom as a sensitivity. A conventional PFS study, you'll see metal prices sitting way up the top as the most sensitive item. This is highlighting again the fact that this is not this is a margin-based business. We're seeing an increase in nickel price. We see an increase. We expect to see an increase in our NCM price as well. So it's quite an interesting proposition, which Danu and Patrick will talk about a bit more in the next session. I'll hand back now to Tony, who can talk a bit about the next stages of work.
Thanks, Andrew. So going forward, this is our next 12 months work streams. So I just go from the exploration, then go anti-clockwise. So as Dr. Owen early on, we continue with the geology and exploration to ensure that we have secure further ore reserve and measured ore for our expansion and prolonging our operation up further beyond 10 years. The upstream, basically metallurgical test work is currently being conducted. Technical study is also in progress. The tailing storage facility design is currently within the consultants doing design for us, and the mining design. Following after that, we have strategic investment, which is our team corporate will be working with our future potential partners and existing partner. For the downstream process, we are continuing with the engineering study, continue with methodological test work. With the test work, we were doing validation of the third party and any of our own Ta Khoa ore. So for me, I want to share with you the next 3 to 9 months is pilot plan and demonstration. So that will lead to you the next page to the project integrated pilot plan. So we're going to have 2 phases in this pilot plan campaign. So we currently construct a upstream pilot plant to producing roughly about 20 to 30 kilograms of concentrate to feed our first pilot plant. The first pilot plant is being engineer designed. We're going through the procurement at the moment. And for this pilot plant PP1, firstly, we try to confirm the design input for the definitive study that we planning for upcoming. And through that, in the basic engineering design and all documentation to be ready and translated into Vietnamese for submission to the local government for approval. Procurement for off-the-shelf equipment in Vietnam, where we cannot get from Vietnam and we get from outside of Vietnam. So in this, we evaluate the local suppliers, fabricator, and the construction contractors. The important integrated upstream and downstream is for us to treat the fresh concentrate from the upstream to see benefit of the energy and recycling of the water. It is also important to us is to ensure that we commencing as early as possible to de-risk the whole project is training downstream team and the local services. Others benefit in this particular pilot plant is we now can obtain a larger, more representative sample, such as our NCM, any residue, and vendor test work. This data is important for the DFS. A lot of time we need to set up the laboratory because this is the chemical plant. Laboratory is not just something that's simple plug and play. We need to collect a lot of data via the library and create analytical metrics and make sure that our procedure are in place and build the library. And lastly, by doing this, we can have the environmental survey study and also doing other tests of our residue, reuse of solid, reusing our chemical for revegetation or other byproduct reuse. That will, once we've done the pilot plan number 1, the pilot plan number 2 is in the planning. It's important to do the pilot plan number 2 is when we start up the restart of our Bangkok nickel mine, where we can produce adequate concentrate. This one is we going to have a proper detailed engineering design similar to the commercial plant as a prototype 1 to 25 scale, we're treating roughly about 1 tons per hour of the concentrate. This particular PP2 is extremely important to evaluate a full recycling stream, steam, chemical, water treatment, reagent, and also validating any supplying reagent from any vendors. By this time, we will be forming a full staff man up for the project. This particular pilot plan, we will train them and create set working procedures, development, all in Vietnamese. The data collected from this particular pilot plan in PP2 is for process modeling, electrical loading, and process control system. It is important that we have the process control system in place. The this is going to create an architect for the commercial plant. Also, during this particular PP2, we will be involved the vendors to get involved with the on-stream analyzer to ensure that all upstream process and data collection and calibration are in place. The development of the full-scale laboratory at this point in time is become very important. This is further equipment is going to be procured, system in place, procedures in place, and this will provide us to ready for the commercial plant. The bulk NCM product at this point in time, we will produce roughly about 200 odd kilograms per hour of NCM product. This is enough product to supply to our end user for testing and all aspects of the NCM product. So for us, it's important is to finish definitive study in the next, commencing the definitive study as soon as possible. We are aiming to appoint an engineering firm for the pilot plant for phase 2, engage engineering firm for the DFS. We aiming to award the TFS in Q4 and setting up engineering center of excellence both Australia and Vietnam to support our engineering consultant with review and conversion documentation into Vietnamese, as well as early engagement with long lead items, procurement such as autoclave and a few other oxygen plant and so on. Thank you, Andrew.
Thanks, Tony.
Thank
that
you,
brings us to the
Tony
end of the
and Andrew.
presentation.
We'll now jump to some of the questions and yeah, heap of great questions coming in, and keep them coming, guys. There's a couple of questions around the green hydrogen project. So I might hand over to Andrew just to run through the concept behind the green hydrogen and maybe just also touch on the PGE study. There's another question around the significance of the PGE study as well.
Yeah, absolutely. So firstly on the green hydrogen. So so our engineer has started on the green hydrogen study, and that's ongoing. We'll look to wrap that into the overall PFS later this year. In terms of strategy around it, so we need to produce oxygen as part of this flow sheet. And so when we looked at producing oxygen, we were looking at a conventional cryogenic distillation facility. When we have a huge amount of green power provided through our, the existing hydro dams in Vietnam, we considered the possibility of maybe making that oxygen via a electrolysis project, and which the byproduct would actually be green hydrogen. So then we started thinking also about with this green hydrogen, then that we can sell it, or what would we do with it? And right now, we don't know where it's going to go with green hydrogen. I think it's a huge opportunity, and I think there will be a strategy where you have batteries and green hydrogen in the future running in parallel. But we may be able to use that green hydrogen ourselves. We have a lot of transportation requirements, and there's existing trucks available from Mercedes, from even Hyundai, and other Korean companies, which are maybe 30, 40 ton capacity trucks with ranges in excess of 500 kilometers, which we can potentially use for our concentrate haulage, whether the concentrate's coming from our existing operation or whether they're coming from the port. Lots of opportunity there for us, and if we can actually be feeding that with our own hydrogen, there's a massive cost saving to have there as well. You soon see places like some of the other big miners who are developing heavy mining trucks with hydrogen fuel. And so there may be an opportunity that if this is successful for us to continue to make our own hydrogen, expand this facility to provide a fuel source for some of our open pit trucks in the future. We're obviously part of the Electric Mine Consortium, and we're looking at battery powered trucks as well. But some of the partners in this consortium are considering battery electric trucks, but with hydrogen range extension as part of the overall to try and improve the accessibility for hydrogen in the open pit scenario. So it's quite exciting. I think the green hydrogen space is we're going to keep following that further, and hopefully I see some good announcements or some good news flow on that in the coming months. With respect to PGEs, PGEs are based around taking the residue from one of these POX facilities and putting it through a further leaching process to take out the PGEs and then recover the PGEs. So we don't think that we're going to have enough feed sources, all with high enough PGEs in them, to support the need to have every single train of POX residue going through a PGE circuit. So we'll look to target and feed individual trains through this circuit to make sure that we're recovering PGEs from the relevant concentrates as they come in.
Thanks, Andrew. I'll try and combine a couple of questions here. There's a lot of interest in the technology, some queries around HPAL. Maybe we'll ask Tony Tang about his experience with HPAL and what really excites him about the opportunity to use the POX technology and the benefits of pressure oxidation. Thanks, Tony.
Thanks, Scott, and thanks to our viewer. The plant HPAL is typically different than POX. They handle, as per my presentation, they handle for low feed grade and high percent of solid, and they require high temperature, high acid consumption, very sensitive to other mineral outside of nickel and cobalt. They also have viscosity, a rheology issue because of the nature of the pluses. The slurry is thickening as you go to high concentration. You need multi-stage preheating, and you need multi-stage flash letdown in order for you to recover your heat. The autoclave leaching in the HPAL is quite intense. You need to get anything above 245 onward. The material construction, as mentioned earlier on, it needs to be depend the geographic location of your process plant. If you need to see, you have to use very high grade titanium 17, 11 to 17 to ensure that you handle the chloride level. West Marmon, where I worked for nearly 10 years in that plant, titanium grade is slightly lower. Scaling in HPAL, you will not see in our process because our feed slurry solid percentage is only 15%, and majority of the gain has been eliminated during the concentration upstream process when it goes through flotation. So the process is quite clean. Majority of the concentrate is sulfide. So once you leach sulfide, you left behind a if you put through the concentrate through such a pressure of roughly about 30 to 40 bar pressure and temperature between 180 to 220, the oxidation process will leach it, and under intense pressure, intense temperature, intense oxidation condition, the solid now should be quite stable. That's how we separate the solid and liquid the moment it discharged from autoclave. Whereas other processes, you discharge with high acid residual, you need to neutralize it, and that's where you get equipment larger, and you give girl-type precipitation, jarosite formation in the autoclave. So many other chemistry, complex chemistry occurring. So yes, the technology is similar, but the process is we use only 15% solid feed, not 30 to 45% solid feed.
Thanks, Tony. Thank you, Tony. One of the questions here is around the location of the pilot plant and the intellectual property behind the technology that we are using. Either Andrew or Tony, I think, can answer that one.
Yeah, so the PP1, the small pilot plant, that's where we're going to have a small pilot plant for our upstream producing 20 to 30 kilograms of our feed concentrate to our smaller pilot plant. It's already had existing infrastructure. We don't need to connect water, compressed air, electricity, and so on. So it's already existing. We also have our existing laboratory available right there. We just need to upgrade our laboratory equipment to handle wet chemistry with complex process sample that leaching chemical. that is where we're going to put our PP1. PP2 is yet to be determined. It could be in the same place or the final location that we're going to build our commercial plant.
Thanks, Tony. I might just go for one last question. I might hand this one over to Andrew. It's around the ore sensitivities and the benefits of pressure oxidation with different ore types. Thanks, Andrew.
Yeah, sure. So the benefits of the POX over some of the other technologies is really around the fact that we can accept a much broader feed profile and still operate efficiently. So if you look at things like a smelter, for example, where your iron MgO ratio is critical to operation of the smelter due to the viscosity, we're able to deal with much broader ranges in iron MgO because ultimately they impact our operating cost through acid consumption and acid balance. So we don't actually there's not a limit on the MgO other than the fact that it results in a higher operating cost to us. Arsenic is obviously an issue where in smelters there's reports of off gases as well. We won't have that issue with arsenic. I think Tony mentioned it in his earlier discussion that that arsenic will actually be leached into solution and then be precipitated out as ferroarsenate into our residue product. And so that's a stable compound which is not going to leach out anywhere. So that's actually then stable and not going to report to our product or any sort of discharge streams. With respect to feed grade, we can take much lower feed grades than a smelter can, and still going quite high in our feed grades. We're quite lucky in the fact that ultimately then they'll just impact the overall output. We may be more limited on the higher grade simply because if we don't plan for if we end up with 20% or average 16% in our feed nickel grade, we may not have enough facilities set up for the downstream to do that. We can obviously expand it, but I guess the main point will be is we can take a much broader range and we can blend some of that material down as well without really having any process upsets.
Right. Thanks, Andrew. Actually, I've got one more. It's a great question from Fergus Kiley. I might hand it to Tony Tang. He talks about the fact that we've got the MHP intermediate product, and then we're doing the selective solvent extraction to get the nickel and the cobalt and the manganese into sulfate, and then we're going back to the hydroxide end product. And I think it's a very good question, and I'll get you to finish the session, Tony, with that, and then we'll wrap up the session. Thanks.
Yeah, ideally we agree with the question. Thanks, Scott. I agree with the question. If we have a very clean and stable feed, then we can control our flow sheet as well. We are going to buy the cobalt sulfate or manganese sulfate source. This is where we need an intermediate product, an intermediate step to ensure that should our stream product is required separation after we do the MHP. It is important that we have three separate solutions to be high purity because our aim is not just produce A11, our aim also needs to produce whatever the ratio, whether 6:2 5:3. So we need to separate them individually rather than keep them in the blend.
Thanks, Tony, and thanks, Andrew. A great session, and I'll now hand it over to Leo to introduce the final session. Thanks for everyone for hanging around, and keep the questions coming. Thank you.
Well, thank you very much, Andrew and Tony, for taking us through that session too. We're now going to our third and final session, a nickel and market outlook. And to take us through this, Blackstone's corporate development team will discuss the demand and supply trends driving the company's strategy. And to take us through this session, we have Patrick Chang, who is the head of corporate development, and Danu Anandarasa, who is the manager of corporate development at the company. So I think Patrick will start off with the presentation, but remember, if you've got any questions for our panelists, please do put them into the Q&A section at the bottom of your screen. So Patrick, over to you.
Thank you, Leo, and thank you everyone for attending. So we hope this session would confirm that right place, right time definitely applies to Blackstone's ambitions. First of all, starting with the right place, as we can see this map, our project is located in Vietnam, really in the hub of a major lithium-ion, in the heart of the major lithium-ion battery hub. In fact, on this map, you'll find about approximately 90% of the current cathode capacities primarily focused on China, South Korea, and Japan. China is a very dominant player in terms of cathode manufacturing capacity. Currently accounts for approximately 2/3 of that capacity. And it's also very significant in terms of supplying nickel sulfate. That's more than 50% of nickel sulfate actually come from China, as well as the ternary precursor products, which trades in China. We will spend a bit more time talking about that in the following slides. So our project being proximal to this to these key players puts us in a very good position, as well as from a funding perspective. We talked about having joint ventures on the refineries. A lot of these names you see on the right are already present in Vietnam. And it's a prime jurisdiction for investment from South Korea and Japan, and which we're going to spend a bit more time talking about as well. This slide shows a simplified supply, basically the battery supply and the nickel supply chain. So starting off with the sources of nickel, there's sulfide ore and laterite ore. Sulfide ore today is a minority in today's market. The total market is about 2.6 million tons of nickel, and it's primarily used in stainless steel, about 72% in fact. Sulfide ore is scarce, it's more difficult to find, and it's geographically more spread out, whereas laterite ore is, relatively speaking, more in abundance and focused in countries such as Indonesia, for instance, and the Philippines. The products can be broadly classified into Class 1 or Class 2, as you can see in this as well. Class 1 products are typically more versatile and can be used in broader applications, whilst Class 2 products are typically only used in the production of stainless steel. Now, the process of getting from the ore to the products, there are a few pathways. For sulfide ore, it's typically through a pyromet process, but as of late, there's development on the hydromet process as well. And Vale's hydromet plant in Canada is a very good example of that process being applied and very successfully to produce Class 1 products. For laterite ore, it's mostly through a pyromet process to produce ferronickel and nickel pig iron products, with a very small proportion coming through the H-PAL process to produce a mixed hydroxide product. This space is interesting in a few ways. Firstly, the nickel chemical product space historically has been a very insignificant portion of the market, less than 10%. But in the next few slides, we're going to show that there's going to be a lot of growth in this space, and this is the space we're primarily interested in from Blackstone's perspective. The hydromet technology, as I've mentioned, is getting developed better on the sulfides. And then lastly, the growth we've been seeing in the nickel supply side is predominantly being driven by nickel pig iron, which is on the far right-hand side. There's been some recent development on this as well. In March this year, Tsingshan, a Chinese company, has revealed plans to convert the existing NPI to nickel matte for export to China to be further processed into products that's used in the battery sector. And we think that could potentially alleviate some short-term pressure. But just from an ESG perspective, we think there's still a lot of work to be done for this product to be accepted in future to suit today's market. Now, our deposits in Ta Khoa are all sulfide deposits. We'll be using a hydromet process, utilizing abundant renewable power, and we think this will produce some of the greenest products on the market once we're in production. This slide, on the left-hand side, you can see the current Class 1 nickel producers. Please note that a lot of these names have been operating for quite a while, quite a long time, in fact. Most of these products today are not supplied directly into the battery space, and they're tied up in other applications. On the right-hand side, we can see the projected nickel demand coming from lithium-ion battery. This year is quite insignificant, but it's going to grow to a projected amount of more than 1.4 million tons by 2030. That might not look like a lot, but this increase of more than 1.2 million tons, we have to put this into perspective. The market is only 2.6 million tons, and what is suitable for making these batteries is less than half of this amount. This essentially means the current class 1 suppliers need to double their production, more than double their production, in order to supply the market. And we see that as the biggest challenge facing the industry today, is to actually being able to meet this demand. There's a few positive things happening in the NCM market as well. We're going to talk about two key drivers, and that's good for Blackstone, for instance. The one is NCM is gaining market share as a cathode. You can see on the left-hand side chart here, by 2030, NCM demand for nickel is going to be 1.2 million tons out of that 1.4. So very significant market share. The second point is that within the NCM suite itself, the high nickel content NCM 811, which is what we're looking to produce, is also projected to be gaining market shares. When Blackstone started itself, for instance, 1:1:1 ratio is the norm. At the moment, 811 is we expect that to be the norm in the coming years. This is confirmed. This is seen across the cathode manufacturers we track. Amongst the 114 cathode producers and developers, approximately 25% at the moment produce NCM as the primary chemistry. In addition, approximately 20% wants to convert the existing capacity to be producing predominantly NCM, or increase their nickel content in the existing NCM production. So it's a very significant amount of demand coming for that. This slide shows the composition of the NCM 811 precursor product. So as you can see, nickel is about half of this product, and it shows the respective price we have to pay for these metals, nickel being the most significant. The other thing this slide shows is the very healthy margin that we would expect when you look at the underlying cost of the metals. More on the premium itself in the next slide. So the NCM 811 precursor price, you can actually track it on SMM, which is the Shanghai metal market. It has been tracked for well over a year now, and there are basically 4 main brands of product that trades in China. The price is tracked daily. In 2020, the market for 811 was about 54,000 tons, accounting for just under 20% of all the ternary precursor products traded in China. As we said before, we expect the 811 ratio to be going up in subsequent years. Based on this pricing and the respective metal price, we can track the premium of this product. The lowest of this premium ever existed was approximately 20%, and the 20% is what we used in our PFS study, which we consider is a very conservative number. The highest number was around 60%. That was recorded after Tsingshan announced its plans to be converting the products to nickel matte, and that has caused a sharp drop in nickel price earlier this year. Given that nickel is a very significant cost component, we just want to quickly talk about how we price concentrate. And I see one of the questions being asked about concentrate as well. So we have received specifications for all the concentrate we modeled. And based on the specification received, we have gone to a third-party consultant who is a trader to come up with a matrix to benchmark payabilities on nickel. So the key variables are the nickel price and the concentrate grade. The higher the concentrate grade, the higher the nickel price, the higher the payabilities in general. After that, we apply byproduct credits. For instance, if copper and cobalt grades are above a certain threshold, we will pay byproduct credits for these elements. After that, we apply penalties. For instance, some of the penalties are, for instance, arsenic. If it exceeds a threshold, we would apply a penalty to that concentrate. So it's fairly generic way of looking at concentrate, and it's basically treating every concentrate as a commercial at a commercial competitive market rate. With that, I'll pass it to Danu to talk about the next few slides.
I just wanted to say thank you for the opportunity to speak. I do consider it a privilege to be presenting alongside our executive team. This slide is a pictorial representation of the profitability or the economics that the Ta Khoa refinery is able to generate. Starting on the left-hand side of the chart is the nickel concentrate, which trades at a discount. This is the ultimate feedstock that is considered in the PFS, and it is upgraded into the NCM 811 precursor on the very right-hand side of this chart. I do, however, think it's important to perhaps step through some of the intermediate products that are captured in this chart. It was a question as well regarding MHP, and Tony has given his explanation as to why that is an important step. I would probably add to that and say that the MHP is quite a strategic step in our flow sheet. It actually acts as both a potential input and output for our refinery. We know that a lot of supply chains have been set up to accept MHP. We can accept MHP. And the margins on MHP recently have been squeezed and tightened considerably. So you see there sort of the range going up towards 85%. If you look at the more recent data, actually, it's even higher than that, MHP trading towards 90% of nickel metal prices. So it's a strategic option for us to actually produce an intermediate product and sell that as well. Patrick touched upon, I suppose, the evolving chemistry that has occurred in the industry as of recently, in the recent years. The two products on the right-hand side are specialty class 1 products for the battery industry. We're very mindful of the evolving technology. As Tony mentioned, we will produce specification that is able to meet the requirements of whoever we are able to partner with on the downstream business. In the next slide, I'm going to talk about, I guess, the sensitivity analysis of the project. There's a few key points that I want to touch on here. The first one is that this is a margin-driven business. So the largest input cost into the business is the purchase of nickel and cobalt concentrate, and then we're upgrading it into a NCM 811 precursor. Now, this has a very different risk profile to your typical mining project. Typically, the mining project will have significant leverage to the underlying metal price. So for example, the nickel metal price. This is very different for the refinery, and that's why I'd like to call it a margin-driven business. So in general, what you will see is that a movement in the nickel price will actually affect both your single largest input cost, being the concentrate purchase, and your product revenue stream in the same direction. So if nickel prices go up, then your concentrate purchase increases, but in most circumstances, you'll see a corresponding increase in your revenue stream. So what is actually more likely to happen in this scenario, if you look at the sensitivity table, is a range of valuation outcomes that goes from the top left-hand corner all the way through to the bottom right-hand corner. So when the nickel market is particularly tight and supply is not able to keep up with demand, we would expect the premium on NCM to go up higher, but also a corresponding movement in nickel and concentrate payability as well. What we'd like to also point out here is we've tested in this sensitivity analysis, I guess quite an extreme range of numbers, whereby if we assume no premium, we also assume a significant movement in nickel concentrate payability. That bottom left-hand corner is still generating a positive NPV, albeit small. It does provide sort of evidence of a cycle-proof asset. The last point I'll probably make here is the spot case valuation of 3.51 billion. It's kind of sitting to the right of the sensitivity table. The important thing to realize here is in the spot case valuation, the nickel price assumed relative to the base case is actually higher. So the overall cost base in the spot case valuation is actually higher than what is considered in the base case. But the real driver of the valuation is actually the premium that is currently observable in the market, which is greater than 40%. And that's really what's driving this impressive spot case valuation. So this slide, I guess, touches upon why we are so confident here at Blackstone that we will be able to secure funding for this downstream business. You can see here a list of major cathode producers and battery producers with high nickel content. The key theme here is that not only is there significant existing capacity, there is significant planned capacity in the pipeline as well. Those numbers are correlated with the demand profile that Patrick presented earlier. As you know, we have a significant existing relationship with EcoPro. Based on the statistics, they are forecast to become to be the highest producer of cathodes in 2021. They have existing relationships with major players such as Samsung and SK Innovation. And those players themselves, in particular Samsung and LG, have announced intentions for plans in Vietnam. Okay, so this slide is talking about, I guess, the progressive nature of the policy that we're witnessing in Vietnam. There's definitely an incentivization for foreign direct investment. And as Andrew mentioned, we sort of unveiled this through the location study, which is going to offer significant tax incentives to the refinery. So here we sort of outlined specifically, we have a tax holiday for the first 4 years. It only increases marginally in the next sort of 5 to 13 years, and it reaches a maximum of 20% after 15. I guess the key point here is that the strategy here is to keep value in country, downstream, promote economic growth within Vietnam, and that is what we're seeing significant support for. Further to that, obviously keeping the value in country is significant, but the government has, created policy that is very, I guess, inclusive for business in the Southeast Asia region. For example, including a free trade agreement with South Korea. So next, I might just talk about the competitive operating advantages of the project. As we said, this is a margin-based business, and the key here is being able to retain that margin. Two of the key inputs which we believe are significantly competitive operating advantages. One is the competitive labor costs in Vietnam. You can see that, I guess, juxtaposed against other major manufacturing hubs around the world. The hydro renewable power is another significant competitive cost. Not only do we believe that it enhances our ESG credentials, but it's also a significant operating cost advantage. We note that VinFast is a major force, a major conglomerate in Vietnam that is planning to produce cars in Vietnam as well as distribute them to US, Europe, and Canada. And sort of Samsung and LG have made significant investments within Vietnam and have announced intentions to actually produce batteries in Vietnam. So the point there being that there is, I guess the stars are sort of aligning towards a complete vertical integrated strategy within Vietnam. The last slide I'm going to talk about is more around, I guess, the premium or a market for a differentiated green nickel product. Whilst we're not certain whether there will actually be a definitive segregation of markets for a green nickel product, we are confident that the inherent characteristics of our project do lend themselves to significant credentials. Those are owing to a lot of the things that Tony and the team have already gone through. So for example, your hydromet process flow sheet, our access to hydropower, optimized transportation logistics. So key point being that we're producing a high nickel content product, nearly 51%. That obviously reduces the transportation intensity. And I guess, relative to some of the, there is a flood of supply that is anticipated in the market. And a lot of that is obviously coming out of Indonesia, but we definitely think relative to those projects that we have some credentials here that will make us attractive and considered positively when these strict criteria become more and more obvious and need to be met by the OEMs down the track. So I'll pass it on to Scott.
Great. Thanks, Danu and Patrick. We'll just jump into a couple of questions and then we'll finish the session. Maybe for you, Patrick, there's some questions around the tax holiday and the permitting approval process, whether it's the same for the upstream and the downstream business. So particularly, do we get the tax holiday benefit at the upstream? And then is the permitting approval process any different between the two different businesses? Thanks, Patrick.
Yeah, the permitting process for the upstream and downstream is going to be fairly different. The upstream is mining, is regulated by the mining law, so it's quite different. But bear in mind, we already have an existing mining license, although that needs to be, of course, amended for the new deposits and processing as well. The downstream is more of an industrial sort of setup, so it's completely different. And with the downstream, I guess, if we were to, just depending on where we go to put it, different provinces have slightly, I guess, different guidance on how they go about permitting as well. But you will still need to do environmental studies with the downstream. But we think the downstream would potentially be easier than the upstream, as the upstream also requires approvals for reserves as well. So they are slightly different. Sorry, what was the other question on tax holiday?
The tax holiday, yeah. I think it's based on the scale of the project, isn't it, and the investment.
The type of the tax holiday we presented is primarily based on location, so and the type of projects. So the two primary locations we presented are basically in what they call the extremely difficult areas, and they give very good benefits for having projects in these areas. Of course, you've got to be in the right industry, because for some industries it doesn't apply.
So one of the questions was also, and I'll cover it myself, is around the ability to permit an open pit mine. What's worth mentioning is that the Nui Phao mine, which is the largest open pit mine for tungsten in the world, and that has been operating in Vietnam for around 10 years now. And so there is a very large, modern, Western style mining for open pit in northern Vietnam already. So we're confident we can permit an open pit mine, and we're very happy with our current relationships with the Son La government, which have been built over 20 years. So our relationships at the subsidiary level have been built over 20 years, very strong relationships with the Son La government, and we believe that they are on board with the idea of a open pit mine and also underground mining as well. But we don't see any difference between the permitting process for an open pit as very similar to an underground. It's a very structured permitting process. It does take time, but yeah, we don't see any major issues on that front. I think we've got time for maybe one last question. There's one about the financing and the joint venture establishment. So the idea is that we come through this pilot plant phase with our partners. Through that pilot plant phase, we work very closely with our downstream and upstream feedstock partners. Then we look to lock in those joint ventures, offtakes, and the final investment decision at the completion of the pilot plant phase. Trafigura, there's a question around Trafigura's feedstock. We do really see Trafigura as one of our major feedstock partners. We will have to lock in long-term or medium-term offtakes with Trafigura at the completion of the pilot plant phase, and potentially beforehand as well. We're very focused on that, achieving those offtakes over the next 12 to 18 months through this pilot plant phase. I think we've covered almost every question. It's been very difficult today. We've got over 45 questions today. So thank everybody for the questions that have come in. Really appreciate everyone staying online. It's been a long couple of hours of I suppose what we really wanted to do is educate the market on the future of the company. It's a major step forward today, announcing our pre-feasibility study for the downstream business. We also are conducting a virtual roadshow, so get online and book a meeting. Unfortunately, we couldn't cover all those questions today, but feel free to grab a meeting slot over the next week, and we can go into more detail. We can do that with our technical team if required. So more than happy to bring the technical team along as well. So really want to thank the team today. Amazing effort to pull this together. I think you'll all agree it's a great document we've announced today. And we look forward to doing this Blackstone Nickel Day as an annual event around this time every year. And just like to thank the one-to-one group for helping us with today's event and also the roadshow this week. But most importantly, I want to thank the shareholders for their patience. It is frustrating that this has taken some time for the market to understand. There's a real education process. Fair value will prevail, don't you worry. We are just as frustrated as you are, but really thank the shareholders for their patience. We are doing something a little bit different, but we are agile, and we are looking to do something that will change the world. And we're focused on this partnership model. We're focused on minimizing dilution to the existing shareholders. That's a really important part of our strategy. We will build this, and really looking forward to, I suppose, just producing a clean energy future for generations to come, for our children and our grandchildren. That's what really gets me out of bed every day. And I know the team has the same view. This is a major movement that's coming, and we're very well positioned. And thank you everyone for your time.